What are the elements of the tax bill that actually might most affect equities?
Well, one of the things we talk about, it's not so much what's in the tax bill, but what the tax bill can do. What we think the tax bill will do is will start to spur M&A activity. A lot of the buyers and sellers have separated. They're not really sure what the tax benefit or liability is. In addition to that, it puts into question some of the funding or the cost of funding. As soon as we get clarity on taxes, we think M&A will start to kick up in earnest.
But are you saying that just the certainty, whichever way it comes out, just having the rules set will spur M&A?
Absolutely. I couldn't say it any better. What you need is clarity. Either it gets done or it does not, because then people can price things.
When you take a look at then the value growth debate, the way you're setting up, it seems like value should really wind up taking hold, right? But when you wind up having a continually flatter curve, how do you justify that kind of rotation?
So we think it's a little bit more episodic. What you should expect to see, the target should be smaller, mid-cap, more value-oriented. So we can see a period where value comes back in favor for a short period of time. We don't think it's a longer-term trend, though.
So what's the downside? Like, what's going to be a trigger for the downside?
So
is it as simple as tax reform doesn't get done at all?
No, I think if tax reform doesn't get done at all, we will have an M&A cycle. I think the downside is as we look into the second half of 18, growth may start to decelerate. As we look in the second half of 18, you have the ECB, the Fed, the BOE, all tightening and pretty far into their tightening cycles. What multiple do you start to put on that? And we can't see an expanding one. What we see is a contracting one.
Do you see a market getting ahead of the economy in that scenario? A market that needs to de-risk over the next several quarters?
So to a certain degree, we do. One of the reasons why we raised our price target this year was passive. The thing that we've said about passive and the thing that we noticed is passive is starting to look and act a lot like QE. Yeah. What you saw with QE is you took a significant portion of the treasury market out of circulation and put upward pressure on price. Here you're taking a significant portion of the equity market out of circulation and putting upward pressure on price. So to a degree, I think you're right.